Good morning. Well, there's just one more sleep until the end of financial year, with ASX portfolio adjustments to continue today and tomorrow. Now, local traders and investors will also be factoring in the poor finish in the US on Friday, with the Dow Jones falling 730 points or 2.8% and the Nasdaq down 2.6%. Now, despite the Nasdaq falling, it has remained in record high hood. Now, nevertheless, the overarching concern is coronavirus cases are spiking. There's fears of new mandated shutdowns, and the concerns are that the market rally was too far too soon. Now, on top of all this, a Chinese newspaper has accused Australia of spying and gathering intelligence. On the commodity front, the oil price poured a loss of 1.5% to $37.93. The gold price glistened up 0.4% to $1,787 an ounce. Copper lost 0.2%, while the iron ore price went the other way, up 0.2% to $103.23. Now, what to watch today? Taking everything into equation, the futures are suggesting a fall of 1.6%, bearing in mind the ASX 200 is now up about 30% from its bear market bottom, but down 17% from its all-time February high. Now, outside of that, a survey of U.S. fund managers has found that they're holding double the amount of long-term average cash, 10% cash. And an alarming 80% are expecting Donald Trump not to win the US presidential election later this year. Now, the fund managers have also said that they're increasingly investing in defensive asset classes and technology for growth. Now, on the company news front, Ampol ALD has just appointed Matthew Halliday as its managing director and CEO, and Fisher & Paykel FPH reports full-year results today. Ending on three trading ideas now. Well, air traffic and management company Adacel Technology, ADA, was reiterated as a Bell Potter buy after the US Army purchased over 60 Adacel simulators, valued at a total of $2.8 million. Secondly, Credit Suisse increased Qantas's share price target to $3 after the Flying Kangaroo fell 13% last week after announcing $15 billion in cost savings over the next 3 idle years, and then won $1 billion in cost savings from 2023. All of this at a time when the Flying Kangaroo announced it doesn't expect to fly internationally until July next year. And lastly, given the automotive aftermarket segment has been upgraded, given many of us don't want to catch public transport and aren't likely to buy a new car. This is to the benefit of aftermarket car business GUD. Now, Citi and Bell Potter reiterated the stock as a buy, given the rise of spare part demand. Now, GUD is also paying a fully franked dividend yield, and it's well above the average yield and fully covered by a strong balance sheet. I'm Jessica Amir with Bell Direct. Happy trading and stay safe.